What's up guys, J-Graph coming at you again with another investing video. Today is a great day. The sun is shining, the birds are chirping, the fish are swimming, and the stock market is stalking. So I'm happy to present you all with my video of my 3 favorite dividend stocks in the financial sector. But as always, before we start, I'm gonna hit you all with a quote. So my favorite rapper of all time, T.I., once said, "Never mind what haters say, ignore them till they fade away." So we're going to ignore the haters and we're going to have a dope video today. So let's get it. All right guys, so here we are in the Robinhood app, and the first stock that I want to talk about today is Goldman Sachs. So Goldman Sachs is a large bank. They've been around for quite some time. They have a dividend yield of about 2%, and their price to earnings ratio is about 12. So this dividend yield is a little on the lower end, but they have grown that dividend yield almost 300% in the last 9 years or so. So I see this PE ratio and I immediately start to ask some questions. Why is this price to earnings ratio so much lower than the Standard & Poor's 500? The Standard & Poor's 500 is trading at about a 24 PE ratio, and this is 50% of that. I'm not entirely sure the answer to that question, but I think what is going on is people are still scared of big bank stocks from the recession we had back in 2007, 2008. I think a lot of people still don't want to invest in these larger banks, and I think that's why it represents such a value right now. And this is not something that's just the case for Goldman Sachs. Pretty much any big bank stock you were to look at is trading at a pretty similar PE ratio. So I wanted to include at least one large bank on my list of top 3 dividend stocks in the financial sector, because 2 Chainz once said, "Big bank take little bank." No, but in all seriousness, I think it is good to have at least one solid established company with pretty good earnings, and really I like it because you know what you're going to get. Goldman Sachs has been around for forever, and it's definitely a large cap stock, and I would say it's probably the safest of the 3 I'm going to talk about today. So this past trading day, it was down 0.6%. Over the past week, it was down 0.2%. Over the past month, it was up 7%. Over the past 3 months, it was up 16%. Over the past year, it's up 24.3%. And over the past 5 years, it's up 38.3%. So for the most part, I like this chart for Goldman Sachs. They've been doing pretty well lately. I think there are some fears about how the changing interest rates may affect them. I know the Fed may raise or lower interest rates, and that has a big impact on their industry. So that's something to keep your eye on. But overall, I really like Goldman Sachs. I like it where it is right now. I think it represents a pretty good value. You can't beat a PE ratio of 12 right now. That's almost unheard of. You'll have a very hard time finding as solid of a company as Goldman Sachs at anywhere near this PE ratio. So the next stock that we're going to look at is Citizens Bank, ticker symbol CFG. So one of the reasons that I like this stock so much is it is yielding about 3.6%, which is pretty high for this sector. I also like that they're trading at a PE ratio of 10.7. This is a bank stock. It is significantly smaller than Goldman Sachs, but effectively a very similar company. They make money the same way other banks make money, loaning it out, charging interest. You get the idea. So I once again think that Citizens Financial Group represents a pretty good value at this point, pretty much solely based on this PE ratio. Citizens Financial Group is a solid company. I did a little research on them, read some news about them, and everything seems generally positive. There's no bad news about them. One of the stocks I was considering talking about in this video was Wells Fargo, which was in a very similar position as Citizens Financial. But when I read the news about them, they had some very negative things going on. There was some talk about some sort of fraud or something going on not too long ago. I'm not too sure what the full details are, but anytime I read something like that, it scares me off a little bit, which is why I decided to check out or to include Citizens Financial Group rather than Wells Fargo. If you all want to, I would definitely recommend checking out Wells Fargo. It does have a little bit of a higher yield. The PE ratio is about the same. It's a pretty big company, but like I said, do your own reading about the news that has come out lately about them and make your own decisions. So over the past day, Citizens Bank is down 0.73%. Over the past week, it's down 2.3%. Over the past month, it's down 1.9%. Over the past 3 months, it's up 10.7%. Over the past year, it's up 12.44%. And over the past 5 years, it's up 72.11%. So I like Citizens Bank right here. It's something that I would include in your portfolio if you're looking for a little bit higher of a yield, maybe less growth opportunities. But I think there's a good place in your portfolio for Citizens Financial Group, especially if you need a dividend stock in the financial sector. So the next company I want to talk about today is probably one of my favorite companies of all time, and also drastically different than the last two companies I talked about, and that would be Visa. So Visa is a credit card company. They also have debit cards, and they do cash gift cards as well. I really like Visa because the world is using less and less paper money and turning more towards credit cards, debit cards, and the like. Something I will note is its dividend yield is much, much lower than the other two stocks I talked about today. It's only yielding 0.6%, but it's growing that dividend very rapidly. So this is pretty much the definition of a dividend growth stock. It has a very low yield, but it seems like it's raising that dividend almost every quarter, and by a significant amount every quarter. It is trading at a PE ratio of nearly 40, which is very high, especially when you compare it to the Standard & Poor's 500, which is at 24, as I stated before. The reason you are paying such a high multiple for Visa is because they have so many growth opportunities. The U.S. has been using less and less cash over time, and credit card usage has gone up and up and up. And some Western European countries, the trend is very similar, but there are a lot of countries where credit cards just aren't used that much, and there is a lot of untapped potential in these markets. Take that into consideration, and you can also kind of think about there aren't a ton of large credit card companies, especially this size. About the only one that I can think of is MasterCard. I know Apple came out with their credit card not too long ago. But Visa is a very established name, a very established brand in this the credit card space. So this past trading day, Visa was down 0.6%. Over the past week, it was up 2.4%. Over the past month, it was up 9.8%. Over the past 3 months, it was up 19.1%. Over the past year, it did really well, up 48.8%. And the past 5 years are almost ridiculous. It's been up 222%, which is insane in my opinion. So I love Visa. I think it is a wonderful company. I definitely recommend you take a position in Visa. However, I don't think you should necessarily take one here. At a PE ratio of 40, I can't help but thinking it might be overvalued. So take that into consideration when you are doing your research on Visa. And as always, make sure to do your own research, make your own decisions, and if you need to, consult with a financial advisor before purchasing any stock or making any investment. So let me know what you think about the video today. I'm thinking I will start a new series where I pick out my favorite dividend stocks in each sector, with the goal of helping you all to come up with a diversified dividend portfolio if that's something you all are interested in. I know the format of today's video was a little bit different, so please comment below how you liked it, what you think maybe I should have done differently. And if you like the video, make sure you hit that like button, make sure you subscribe to my channel, and hit that bell so you can get future updates on what dividend stocks to buy, updates on my portfolio, and other investing related videos. And with that, I want to thank you all for watching, and JGraph out.